Hi everyone, welcome once again, and we are discussing about market indicators, and this video we are going to see the sentiment indicators, or in other words the depth indicator. So what is the purpose of indicator? We want to get an idea or a hunch about whether there is a possible reversal in the trend. What is going to happen in future? If the price is moving in some direction, is it going to continue or it is going to take a reversal? This is one of the objectives of getting an idea about market indicators. Now let's take up the first sentiment indicators, that is the put-call ratio. Put-call ratio. So you can understand the possible tendency of the markets towards a bearish trend or a bullish trend by knowing the put-call ratio. Now just let me explain the rule and then I'll explain the logic. So put-call ratio, if this ratio is more than 1, that is there is more of the put than the call, then we can say there is a bearish trend to follow. The trend is going to be bearish. But if the put-call ratio is less than 1, then I would say there is more of bullish trend. Now let's understand why. This is because put option has been exercised as a selling option. As you all know that we want to hedge against the possible risk of price fluctuations. So as an trader or an investor, if you want to see that you are going to protect yourself from the adverse price movement, so you will have a put option. You can buy a put option which gives you the right to sell something at a future date at a predetermined price. So suppose you want to sell something at rupees 25 after 6 months. Okay, because you are not sure whether the price will be 25 or not, it may come down to 20. So in order to protect yourself from the adverse price movement, you are sealing the contract at rupees 25. So this is called put option. But if it is a call option, actually it is a buying option. Call option is a buying option that you want to buy it at 25 because you are worried the price may go to 30. So after 6 months, if the price is 30, a very high price for you, so you want to protect or save 5 rupees by entering into this contract. Now if in the market you find there is a more of the put options than call options, then the ratio will definitely be 1. That means more people are willing to sell. Why? Because they are estimating more people are willing to sell because they are expecting a price fall in the future. So price fall in the future means some kind of pessimism is there in the mindset of the investors, and that's why they are going into more of put option, sell option, right? So if this is so, then it will show us a possible tendency towards a bearish trend. Whereas if you see that the put call ratio is less than 1, that means more of call options are there, and call options is mainly the buying option, and you believe that the price is going to take a rise, and that's why you want to protect yourself. So since price is going to take a rise, therefore there is a bullish trend to follow. So of course the put call ratio is very helpful in understanding the price movement or whether there will be bearish or a bullish trend to follow. Let's understand the second one, and that is the VIX. Okay, so what is VIX? VIX is the volatility index. Volatility index. Okay, so let's understand what is this volatility index. VIX is developed by CBOE, that is Chicago Board Option Exchange. It is based on S&P 500 options. Okay, so on this stocks, this VIX, since it is an index, it has been constructed over 500 option scripts. Right, now what the VIX will say? VIX will speak about the sentiments of the investors. So since it is an index, to make it very simple, this index value, if it is less than 15, so VIX is less than 15, it will indicate that the market is stable. Okay, or you can say the market is calm. Market is very calm. There is not much volatility. Okay, the market is calm. If the VIX is between 15 to 25, then they say it is say stable. Okay, and if the VIX is from 25 to 50, they generally consider it to be a fearful situation. The market is has encountered a phase where there is a lot of fear, and if it exceeds 50, you can say the market is very volatile and highly unstable. It is highly unstable. Right now, this VIX, for example, in COVID-19 era 2020, this VIX had gone very volatile. It has exceeded 80, and therefore the market crashed. Right, so this VIX will tell us actually the sentiments and how the investors feel about the market. If they are calm and quiet, the values will be less. But one thing about VIX is that VIX will not tell us in which direction the price will move, or whether there will be an uptrend to follow or a downtrend to follow. Okay, but it will simply say that there is a lot of volatility in the market, or whether there is an existence of volatility or absence of volatility. Absence would mean that there is less than 15, VIX is less than 15, and if you say it is volatile, it could be say more than 50. So this has been developed by CBOE, but in India we also have a VIX developed by NSE. We call it NSE VIX. Actually, it is not properly, it is built up by NSE, but it is known as the India VIX. It is known as India VIX. So it is probably in the year 2008 that it is constituted. So this also gives to the investors of India an idea about how the market sentiment is. So friends, I hope these indicators are clear and very helpful for us to understand the market moves. So starting from the beginning, we have talked about the breadth and the depth indicators. Under breadth, we have seen advanced decline line, we have seen the McClellan oscillator, we have seen the RSI. In between, we have also seen what is a divergence, where we have discussed about the bullish and the bearish divergence regular, and we have also seen the bullish and bearish divergence hidden. And then we proceeded to discuss about the depth indicators. Basically, we have discussed the two depth indicator or sentiment indicator. One is the put call option ratio, and we have seen this volatility index. So friends, that's all for today's lecture. We will meet again with another video. Till then, goodbye.